We're now shifting to another panel discussion, and it's about accelerating investment in climate growth. And the moderator for this session is Jacki Johnson, who is the co-chair of the UN Environment Programme Finance Initiative. Over to you, Jacki.
And it is great to be here, and I too would like to acknowledge the Gadigal people of the Eora Nation and their elders past, present and future, but importantly, as a finance sector, we recognise the resilience and the lessons we can learn from our First Peoples. It is really exciting to be here and listening to the forum this morning to hear not only ambition, commitment, but actually action. And we've heard that from the New South Wales Government. We've heard it from some of the speakers that were on the panel this morning with Gillian Broadbent's comments about what it really has taken to stay the course through those 10 years that she's been involved. And today, what we want to explore was the private sector. And I'm very fortunate to have two really experienced people with me on the panel, with Katharine Tapley from ANZ and Rachel Lord from BlackRock. And both, if you read their bios, I'm in awe of moderating this panel when you look at how well recognised they are in this field. But I just wanted to make a few comments. I just mentioned about the ambition, the commitment and the action that it takes. But it takes a belief. And as the sustainable finance industry here in Australia, back in 2018, we realised there was a lot of action happening around the world. Many of us were involved with TCFD, so climate disclosure projects through UNEP-FI, but also in other forums. And we started to think about what if we could have a sustainable finance roadmap. And in discussions with the federal and state government and local government and academia, there was support if we held a summit. So I think it's the first time I know in my career where we had investors, banks and insurers come together to have a summit at Sydney University where we had 300 people all come, and we had members of civil society along with academia and government, and said, well, let's see what we could do. And it seems a bit unbelievable now that by last November, given everything that's happened in terms of our weather events and COVID-19, that we actually launched a roadmap. And although it's got 37 recommendations, I was listening to the speakers this morning, and I think what it does is it actually brings together all those concepts of how finance has to take a leadership role in making sure that we embed it in our strategy, but also understand the culture and the leadership that it takes to mobilise capital for a transformed society, to make sure it's integrated into our business practices. I mean, I was listening to Shane Elliott talk last week about being a sustainable bank rather than a bank who does sustainable finance, and I think Katharine will bring that to life. That's a very distinct difference of what we're seeing of the finance sector. And the third theme within the finance roadmap for Australia has been about resilience. Coming from an insurance background and a lot of the work that I've done with Insurance Australia Group, we realise that the transition is also about the weather patterns have already changed. So we need finance to help with resilience and mitigation as well as adaptation. And then the fourth area of the roadmap calls out all the action to do with actually creating finance markets. And this is where Katharine and Rachel will no doubt bring this to life. So without taking much more time, I would like to hand to our two panellists. And firstly, I'll go to Katharine, who is now one of the directors of the permanent body, the Australian Sustainable Finance Institute, and has brought a lot of experience through the ASFI process where we had her co-chairing one of our work streams. And Katharine, I'm really interested about your personal journey in sustainable finance, but importantly, why is it so important to ANZ and why is it transformational for you as an organisation?
Yeah, sure. Thanks, Jacki. Good to be here with you. Nice to see you on the screen there, Rachel. Looking forward to hearing your comments. So my personal journey in sustainable finance started about 5 or 6 years ago when we created the Sustainable Finance team at ANZ. We really kicked off with doing our own first green bond. So we decided as an organisation that we couldn't be in these markets without understanding what it's like to be a borrower in these markets ourselves. All the Australian banks are large borrowers in capital markets, and so we made a decision to make a green bond issuance back in 2015, and we've gone on subsequently to have a whole portfolio. In fact, we're one of the largest financial institution issuers of ESG format bonds globally. We've got about $5.2 billion on issuance across Australian and US dollars, euros, for our funding and capital needs. And our framework is now not just green, it's social and sustainable as well, and it's actually framed around a collection of the Sustainable Development Goals, which we did because we were encouraged by some of our investors to do that, and maybe we might come to that later on in the conversation about why. But also we're a signatory to the UN SDGs, and we felt that those SDGs give us a really great way of describing how it is that we deploy our own balance sheet. So that's kind of how my journey has happened and evolved very fast over the last 6 years. We now have a team of 20 people across the globe, very active in Australian and New Zealand markets and up into Asia as well. To the second part of your question about why is it important to us, there's really two main reasons. Number one, and you heard, I'll quote Matt Keane, he talked about the compelling economics earlier today. We heard from Martijn and Ian Kay and Ian Learmonth and in relation to all the activities that the CFC is up to in ARENA. Our customers know that this transition is coming. They're asking us for OPEX and CAPEX across a range of their needs. This is coming from right across the sector, not just from those so-called hard-to-abate customers. We see this in agri, we see this in the built environment customers, we see this in manufacturing, transportation, infrastructure, and we're responding with a really broad range of sustainability options, whether it's project finance, whether it's advisory, whether it's our capital markets capability with green bonds and social bonds, it's our lending capacity as well with similar structured bonds, as well as the sustainability-linked type structures. We're now doing derivatives. We're doing products into the working capital sort of equation as well around guarantees and letters of credit. So seeing it quite broadly. So we're responding to what our customers want, both on the borrower side and on the investor side. It's really interesting. I talked a bit before about having a team that's now 20 people. Phenomenally, we've just hit the end of our financial year, and as at the 30th September, the Sustainable Finance team had participated in as much volume, so it was about $120 billion worth of volume through the previous 12 months. That was more than the previous 5 years put together. Goodness. So it really speaks to the uptick in responding to the opportunity piece and leaning into that ambition that this whole seminar is really all about, and also the kind of messaging that we're hearing coming out of COP. So, very exciting part of the market to be. I think the second part of, why ANZ sits here and why I sit here is, you referred to it when you referred to Shane Elliott before, it really comes back to our purpose. So our purpose is to shape a world where people and communities thrive, and we have three key pillars to that: housing, environmental sustainability and financial well-being. And we think that really gives us the mandate to act and to put sustainability at the core of our decision making. We take it really seriously that we sort of stand in the middle of these capital markets, deploying finance, mobilising finance from investors through our capacity to borrowers, and we think we've got a really important role to play in that transition. And really comes full circle to the first reason: our customers are demanding that from us. So really it's those two things are interlocked together.
Thanks, Katharine, and we'll pull apart a few of those threads after we've heard from Rachel, because you raise about the social factor that's outlined in the SDGs, that really what we've seen through COVID-19 is the economy social, health, environment are not disconnected. And I think we heard before from Sean about communities understand this, and it's driving a lot of energy about the change our communities want as well. Rachel, the same question to you. I mean, I know receiving Larry Fink's letter at the beginning of every year about his expectations of what you invest in as BlackRock, galvanises a lot of CEOs and boards around the world. Interested in your view about, well, what led you to sustainable finance, but also BlackRock's position?
Yeah, thank you. So great to meet you, Jacki. Thank you very much. Katharine, great to meet you as well, virtually. What's driven our position? We have always been as really we're the world's largest asset manager. Not that size really means anything, but we manage a lot of money for clients. And so we start from the perspective that we're a fiduciary to our clients. Our job is to manage their money in a way that they are looking for, that they've signed up for. We've promised we'll do certain things. And so we take sort of commitments, purpose, fiduciary responsibilities very seriously. And as part of that, over the years, we've always been focused on long-term returns. And so, in investing, unlike in trading, you're putting people's money to work. Usually for us, it's around pensions. And so when people are investing money in their pensions, they want very long-term perspectives. Over a number of years, it has become clearer and clearer that in order to deliver on our promises to our clients, actually you have to take into account the impact of finance on the broader environment. I don't mean necessarily the physical environment, but on societies, communities, people, long-term investments that are purely designed to rip off money from clients don't tend to work. In the long run, companies only survive and thrive when they are providing services and products that are wanted by the clients that they're providing them to, and that are, in general, good for society. So short-term blips aren't things that we focus on. As the science around climate change evolved over the last few decades, it has become increasingly clear that climate in particular has become something that is actually an incredibly large component of investment risk today. And it is an investment risk in the same way that interest rates are, in the same way that economic policies are. There are many factors you have to consider as part of investment risk. Climate is clearly one of them. It's not the only one, but it's become a more important one. And I feel slightly idiotic saying that in an Australian conference because you're at the sharp end of this, I believe, in your lived experience. So we've been on this evolution around how do you start to think about building climate risk into the work you do as an investment manager. And in some cases that is how we're evolving around this. We try and offer in our index products because, as you probably know, or your audience might know, over half the money we manage for our clients is index-based investing. And so, in an Australian context, if I don't know, pension clients or end investors want to invest in the Australian Stock Exchange, they might buy an index fund. So they're not asking us to make decisions about what we invest in. They've made that decision, and we then have to deliver the return on the thing that they've invested in. So there we don't really have choice about what we invest in. The other half of the money we manage, we do have some choice. We are we're like this chef in the kitchen. We get to choose the ingredients that we use in creating the product that we're offering to our clients. And how you manage across that? Well, in index land, if you're not offering sustainable index products, then you're not really offering your clients choice. So in index, we've focused on choice to try and offer clients, investments that will allow them to express their own views on sustainability. And, having managed parts of the firm across the world, there are different flavors to sustainability in different countries and in different segments of the population. Some people are very focused on the social. Some people are more focused on the environment. So we try and offer choice and guide people as to what choices are available to them. In the active side of our investment business, how we've chosen to sort of take on this mission around embedding sustainability risk into the strategies that we manage, we will offer things in the private markets that are focused on a lot of what we're talking about today, decarbonisation technologies. We've just announced today the Climate Finance Partnership is finally funded. That's taken us 3 years to build. That's an incredibly important partnership that we've done with the governments of France and Germany and other significant investors, many of whom are in this region, to be able to deploy capital into helping emerging economies, developing economies, deal with climate change. Our renewable power franchise, we've been building that for 20 years, and we're one of the biggest investors in renewable power now, including, I'm very proud to say, we have an investment in Jolt in Australia. So we're trying to help with the transition in Australia to electric cars, providing the infrastructure across the country that will enable people to actually run, not sort of fossil fuel cars, but electric cars. So we focused on a lot of things where we either trying to design strategies that are helpful to investors, or we're trying to give choice. And in all of that, we're trying to use our position and our voice to talk about these things very publicly. And that's really where Larry's letters come in.
Thank you very much, Rachel. And what is interesting for me is both of you have touched on the purpose of the company, about why you exist. And you've both brought that to life about, the role of business in society is increasingly important. It's always been important, but it's increasingly important when we're facing into transformation. The other thread that I'd pick up from both of you is you talk about the customer and you talk about investors, but there is another stakeholder that often has a view on how a company behaves on both social and environmental matters, and that's the employees. Katharine, I'm wondering whether you have some insight about, well, why has this mattered to ANZ with ANZ's employees? Does it attract people to work for you, and does it motivate people in the organisation?
Yeah, great question, Jacki. And one of the things that I talk to our customers about when we're talking to them about whether they should be in capital or loan markets in sustainable finance format is around some of the, what you might call the qualitative outcomes of being in these transactions. And one of them we always talk about is staff engagement and the impact on the company and the energy around the concept of sustainability. And almost every single time, treasurers will come back to us and say, you know what, we heard you when you said that. We didn't really believe it, but this has been one of the greatest impacts of this transaction is the engagement of staff. Certainly the same thing has happened at ANZ. So, we're a very large organisation, so it does take quite some effort to talk to 40,000 people about our own participation, certainly in sustainability bond markets. But of course, we also have our own staff programs. We're a company that's been carbon neutral for over 10 years, and we put a lot of effort into communicating what we do as a corporate around our environmental footprint, as well as what we do in around social issues as well. Financial wellbeing and financial literacy is a role we play quite materially to deal with the social aspect of that. In terms of my own team, yes, look, I'm constantly beating the door back actually around people internally as well as externally wanting to be part of ANZ sustainable finance journey. And of course that's always such a wonderful position to be in when you're spoilt for choice. There is definitely a war for talent going on currently, so having that edge around sustainability and being part of that movement from a financial perspective is definitely very beneficial for us.
And that touches on the point that in sustainable finance, we realise that education and skilling of the finance sector is going to be really, really critical in our direction. So actually having really highly motivated teams who want to learn is going to be important for us to be able to deliver as a sector. Rachel, I'm interested in BlackRock's view on how does this play out with your employees and why does it matter to them?
I think it matters to all humans. And so it doesn't really matter what kind of company you run today. I'm a little bit, maybe I'm a little bit more cynical than Katharine. I don't think it gives us an edge with employees. I think you either have it or you don't. And I don't think humans will want to work for companies, unless it's the only job they can get, who are not thinking about their role in society, in climate change, in doing good. I think if there is one lesson that is profound from the pandemic, it's that you want to work for companies that are trying to create positive change in the world. We've all had this existential shock over the last, nearly 2 years now. And what we see from employees, and this is what you're seeing in this whole global, great resignation, it's called, around people not wanting to go back to the lives or the jobs or the work that they had. They want to work for people that treat them well, that do good things, that pay them fairly, that help develop them as individuals, that help them contribute to the betterment of society. These are fundamental core tenets of people, I think. And so if you're a company that isn't engaged in this conversation, even if you happen to be in an industry that is actually, potentially an industry that has to undergo radical transformation over the next 10, 20 years. So if you're in more of, let's call it a brown industry rather than a green industry, you must believe, in order to get the best employees, you've got to be able to offer people a path that says how you are going to improve and contribute to the betterment of society. So to me, this is we've gone past the point where people either have an edge or they don't. You either have that or you don't have it. And if you don't have it, you won't keep your employees. You won't be innovative. You won't be successful. You are not going to deliver better returns for stakeholders, whether those are employees, clients, investors, anybody else. So it's a bit like climate change itself, right? We've gone past the point of no return. And so we have to offer employees, I think, as employers, an environment where they can thrive and spend what is the majority of their waking life doing things that they believe in, that are fitting with their purpose and their desires to have a positive impact on the planet.
And Rachel, you touched on something before about the difference between your active management and the index funds. And often it gets called out that investors operate in a short-term perspective. And it's this, what we're in the middle of is trying to manage a transition and transform the global economy through making sure the finance is directed to the right place. How do you balance that? Because you still need to meet the short-term needs of markets, but have this eye on the prize about where we're heading and how we need to have a decarbonised future.
So the thing that I didn't mention it earlier, but the thing that we think that helps to drive change and positive returns at the companies we invest in on behalf of clients is our stewardship efforts. And so we're a shareholder in everything. As a function of being an index manager, if a stock sits in the MSCI World or or the S&P ASX, we don't have a choice. We have to own it. And so what do you do when you own a position like that in something where you want to raise the standards, raise the discussion, raise the profile of whatever the issues are that you focus on? And so for us, we use our stewardship team to do that. So we will vote, we will exercise the votes based on client demands. And we've now, because of this difficulty of really delivering on what all clients want when the views around the world are so very different, we actually have now announced a few weeks ago that we will, in roughly a third of our index assets, we're now giving the vote directly to clients so that they can exercise the vote in relation to their shares. There are other funds where we can't do that because it's just not possible practically. And so where we are going to be exercising the votes, we set out at the beginning of every year the policies that we will be using in order to exercise those votes. And those include our policies around sustainability, particularly governance, but not just governance, the environment, et cetera, et cetera. So we use voting. And then obviously with, that's important across index and active, but particularly index, where you don't have the choice. You can't actually sell. You would not be following the instructions of your client if you sold an asset. So voting becomes critically important. In active, where you are choosing what assets to buy and sell, well, actually, you can exercise your choice. And so typically how we try to have an impact is we will exercise our vote. We will engage with the company to explain what we think are things that should be considered as they set out their long-term strategy. And ultimately, if we don't think that it's going in a direction that we think is best for the shareholders of that company and the stakeholders of that company, then we end up selling. But that's kind of like the last resort, basically. So it's a combination of where we can buy and sell, we buy and sell. Where we can't, we exercise our vote, and our stewardship practice covers all of that.
Thank you. And ANZ, you're a very big organisation having to balance the customer's needs in the short term and then direct this capital longer term for this major transformation. How is that tension balanced?
Yeah, look, in sort of theoretical parlance, it's actually not that dissimilar to what Rachel was actually just talking about. So, we're responding to our customers' needs in the short term, but we're also putting a great deal of effort around understanding in the long term with our customers. Are they positioned well for transition to a zero carbon future? What are the plans they've got in place? What's the scenario testing they're doing? And we're engaging with them consistently on that topic. And actually, we have been doing that, Jacki, for the last 3 years. So you'll hear Shane Elliott talking about by the time we get to 2030, we will have actually been talking to our customers about this for 15 years. Yeah. So doing it in the very short term, but then making sure that that's a sustained practice of engagement over the long term. I think, too, for me, the transformation piece is being deeply engaged in the marketplace as well, and understanding beyond the day-to-day practice of lending money or distributing bonds into the capital markets. What are the bigger picture trends going on, and how is that going to affect our customer base and our business into the future? So for ANZ, being part of ASFI, being part of the Task Force for Climate-Related Financial Disclosures, similar on the Task Force for Nature-Related Financial Disclosures. We've just recently joined the Net Zero Alliance for Banking, Principles for Responsible Banking. So being really tapped into that global market and understanding kind of where the industry is going, and also being part of the shaping of that industry. So that's also part of certainly how I see the transformation aspect, as well as the transition piece kind of sitting in the day-to-day business.
And both of you raise a really important point about stewardship, but also being part of collective action, that if we're all on a learning journey together, we need to be partnering, and that came through as a theme earlier today as well, to really learn. And we're really going into uncharted territory, but we can't stop. We need to be brave and keep moving forward. This leads to my very last question, given we're really nearly out of time. We've talked a lot about the money, and we have touched on things like the culture of an organisation and the purpose. But really, this is about leadership. And there's a lot of people on our call today listening and probably thinking, oh, it's great to hear some of those people doing stuff. But really, this is about every one of us having to show leadership if we want the scale of the transformation to succeed. Last words from each of you on what would be your call to action for leaders, what they need to really think about to lead in this space, so we can all work together to get the major impact we so rightly need, and particularly in Australia, where we believe we can lead on so many things. Katharine.
Look, I would say be brave in the articulation of how it is that you want your organisation to move forward, and don't be afraid to raise those concepts, obviously respectfully and within the the confines of your organisation. But stand up for what you believe in and what you think your organisation should be propelling forward, I think would probably be my number one piece of advice. As someone who I sometimes do describe myself as a mini activist within the confines of ANZ, and it's a fun place to be, and I work with a lot of really great leaders and people who have compelling views around how we are stewarding ANZ as an organisation, but also how it is that we are helping our customers. So that would be my advice.
Thank you. And Rachel, your advice to all the leaders on the call?
Look, I think you have to be clear and articulate your purpose, make sure that your organisation understands it, and then be bold in how you go about telling that to the world. And it's not comfortable. These topics are very nuanced, partly because while I think there is commonality around the world in understanding the point of sustainability, there are 50,000 views on how to do that. There is no one view. And I would agree with you wholeheartedly that being part of a collective discussion on this, not being evangelical, because that just kind of tends to annoy people, but having collective discussions, engagement, stepping up and playing your part in figuring out how do we transition. There's a reason that net zero commitments are by 2050. It's because this is hard. It's going to take us 30 years to get this done. So this isn't a tick box exercise. This requires transformation of your organization, and it requires leaders to be bold and not scared about practicing things and getting it wrong. You're going to get it wrong. We're going to get it wrong as a planet a lot in the next 30 years, but collectively we work hard to get things right. So think about that in the way that you lead your organization, and make sure that you're very clear on what you're doing and why you're doing it, or you'll just get very lost in the noise.
Thank you, Rachel, and great pieces of advice. And I'd like to thank both the panellists for your insights, but particularly being so generous with your own personal journey as well in this panel, because as you're pointing out, it's a personal journey as well as a professional one in our companies, and we need to make it really count in the next decade. So thank you, and thank you for the opportunity to moderate this panel.
Wonderful. Jacki, thank you. Katharine, who's with me here in Sydney, thank you for your time today. And Rachel, who's in Hong Kong, I was looking over Rachel's shoulder. I sort of spent a lot of time in Hong Kong, and I can sort of get a sense of where she's sitting. We really appreciate your views as senior ladies, women in the financial community, and certainly around this important topic of shifting capital into impact. And the shift in capital has been underway for many years, so thank you indeed.